My name is Raymond Carbone. I am the president of Paramount Options, and I am an option trader. I trade options on all the energies, all the products, and crude oil and natural gas. Well, it is one step removed from the physical than the future is, and basically it's an option to either buy or sell a futures contract at a specific price at a specific time. So options expire every month, and whether you buy a put or a call determines your view on the market, and you can be short or long the market in two ways with options. You can sell a call or buy a put, that's a bearish play, or you can buy a call and sell a put, which is a bullish play. So you determine whether you want to, let's say you pick a strike price at a $100 call, you buy that call, whatever you paid for it is all you can lose. And if the crude oil futures price rallies through $100, you have the option to exercise and buy crude oil at that price, the strike price that you choose, in this case, in this example, a $100 call. Consequently, you can choose to buy an $80 put, and if crude oil goes down, you have the option to put that future to someone at the $80 strike. So whichever strike price you choose determines on where the price kicks in, and whether the futures price is below or above that determines whether you make money or not. So it's a step removed from the future. One of the more interesting components of options is if you're a buyer of an option, you have a limited risk. Only what you paid is what you can lose, and you have an unlimited potential gain if you're a buyer. If you're a seller of an option, then you have unlimited risk as well, because the option can go as high as possible. Options are risk management tools, and when you buy them, you can only lose what you paid, and a lot of people like that more than the unlimited movement possible in a futures contract. Not unlimited on the downside, it can only go to zero, but unlimited on the upside. Now we have the usual array of clients that exist on the exchanges, and they basically consist of producers, oil refiners who are on different sides of the market, usually. There are hedge funds out there trading the market, and there are oil companies out there that are also trading the market in addition to hedging their portfolios. And then, of course, there are banks. And banks get involved in the process by being an intermediary between, let's say, a producer in Canada who is producing oil, has a risk that oil prices drop. Maybe they will sell that producer puts to protect himself on the downside in case there's a down move. And then they will come into the options market here or over the counter and buy back those puts. And so banks play a crucial role in that, in financing of projects and laying off their risk on the exchange. I think at any moment in time, one could be more active than another. It depends on where the price is, if hedgers are in the mood to hedge at a certain price point, or they're just going to wait. Hedge funds might be a little bit more active on the day-to-day trading because they're trying to move markets and trade markets as they move. Refiners and producers tend to be price sensitive, and that kicks in their activity, and banks are always involved in the process. On a personal trading level, I think I am more of a reactor to information that is public information and formulate opinion based on that information, whether it's a bearish or a bullish viewpoint on the market, then take that opinion and formulate a trading strategy around it and try to use the best combination of puts and calls to achieve my objective with a trade. So I probably do not influence prices personally because my trading is not big enough to do that. And I will try to take advantages of what I would see in mispricing. Maybe the markets run too quickly up or drop too quickly as yesterday's action did. I'm more of a reactive person. Well, I look at these numbers as snapshots in a very, very global picture. They are very U.S. centered, obviously. They are put out by the Department of Energy. The U.S.'s influence on the oil market has diminished over the last, say, 10 years, and specifically over the last 5 years, as the global market and the global demand has picked up. The emergence of China, India, and the emerging markets in general have taken away a lot of the influence of the United States. So when the U.S. releases inventory numbers, I think they're good for a short-term look at the market, but not an overall global picture because there are so many other players in the market now. From my understanding, the expectations are slightly bearish, builds in both the heating oil and the gasoline, and another build, I think it might be the 11th consecutive build in crude oil inventories. Whether that comes to pass or not does not really affect my long-term outlook on prices. It will affect the short-term movement today, to a degree, depending on what they are. So I don't really like to speculate on the APIs or the DOEs, precisely because I feel the expectations often dictate where the market goes instead of the reality. If someone says we're expecting a 3 million barrel build, and we come in with a 1 million barrel build, people will take that as a bullish sign, when in reality it's still a bearish occurrence. So I find the expectations change the result that the numbers actually bring when they do come out. So I tend to not put much credence in these short-term volatility events that we have every week. Hand signals usually involve months. Every month has a hand signal, and then of course numbers and quantities and prices. So just to give an example, we are now in the month of April. April's month the symbol is J, so we make the closest thing to a J we can, and that's April. May, June, July, August, September, October, November, and on and on. When we do numbers, we have the tens are up here on the forehead, the single digits are on the chin, and if you're buying, you're bringing your hands toward yourself. If you're selling, you're going away because you're pushing away. So if I want to sell 20, that's 20, that's 22, 22. If I'm a buyer of, say, 55, I'm going like that, 55. A lot of times it is not used as the primary trading way, but it is used to confirm and check your trades, which you have to do with your counterparty, and that's usually where they come in. We check our trades, we confirm the quantity, the price, and the month, and we do that with hand signals.